financial problems, elder law, criminal law, tax problems, business matters, divorce, personal injury, bankruptcy, your life, your reality. Life is complicated. There is the law and there is reality. Welcome to Law and Reality, sponsored by THAV GROSS. Now here's your host, Ken Gross.
Welcome to this segment of Law and Reality. Today's topic is starting fresh after the business is lost from COVID-19. Somber topic, but it's also an optimistic presentation from the standpoint of moving forward. Brian Small, good morning.
Morning, Ken. It is a discussion of reality as we see thousands and thousands of restaurants and personal small businesses closing all over the country right now, regardless of the fact that there's a vaccine that's being distributed.
Jeff Linden, good morning.
Good morning, Ken. Good to be here.
Good to have you. All right, so here's what I want to do, guys. I want to do a case study that kind of flushes out these issues. So rather than talking in generic, we'll kind of try and talk more in specifics. I think it's a better way of showing people how to deal with the problem. So here's our story. Okay, our client is Jim. He owned Jim's Family Restaurant. Very unique name that I've developed for this case study. So I want you to compliment me, Brian, on my naming ability. And see if hopefully I'll remember Jim's name. All right, here's the basics of his business debt. He has a secured line to the bank of $100,000. He has equipment leases of $85,000. He's personally guaranteed those. He owes food vendors $35,000, no personal guarantees. He's got $125,000 of credit card debt. They're all in his name, but that money went into the business. He owes payroll taxes because he had been continuing to operate the business and wasn't paying his payroll taxes of $150,000. He owes state payroll taxes of $85,000. He has a lease on the premises that he's back rent is owed of $50,000. There's no guarantee on the lease, fortunately. Total business debt $545,000. Personal debts, he owes $85,000 in income taxes from 2016 and 2017. $40,000 in personal credit cards. He's got a $200,000 first mortgage, $50,000 second mortgage. Total personal debt $375,000. Total debt $920,000. So he's got a lot of debt. Assets: cash in the bank $10,000. House equity over and above the first two mortgages $20,000. He's got $10,000 in an IRA. He owes a 2005 Ford F-150 worth $3,000. His personal belongings are worth about $5,000. So he's got $48,000 in assets. He's got basically $1 million in debt. That's the scenario. So my first question to the wizards is, what debt is Jim liable for and what debt is dischargeable?
Okay, so yeah, I'm a taker on that one. So first of all, I just want everybody to realize that in that situation, which is typical of a small business person that's come in and hasn't seen the light and knew to shut down the business a long time earlier, which is unfortunately reality, the $48,000 worth of assets that Jim has, Jim gets to keep. Whether we're in a bankruptcy situation, if we're in a bankruptcy situation, he still gets to keep that stuff. But Jim, when he files a bankruptcy, Jim is going to qualify automatically for a Chapter 7. And that's because his non-consumer debt is greater than his consumer debt. Reminder to our audience, a Chapter 7 bankruptcy is a debt elimination bankruptcy. Wipe out your debts and get a fresh start. Get rid of the debt that you owe, keep most, if not all, the assets that you own. So in this case,
I realized that, but I first wanted answered, counselor, was what debt is dischargeable and what debt is non-dischargeable.
Okay, so his business debt.
You've already jumped 4 pages ahead in the
I
outline.
understand.
It's okay. I understand.
Objection sustained.
The secured line of credit, his personal obligation on that debt is dischargeable. The equipment leases that he personally guaranteed, that's dischargeable. Theoretically, if there's any way to pierce the corporate veil and come after him individually, the money owed to the food vendors is dischargeable. But as we indicated
Basically,
earlier,
he's not liable for that anyway.
the credit cards, the $125,000 for the credit card debt that was used in Jim's business, which he guaranteed is dischargeable. The lease on the premises is dischargeable.
But wait, on that. But for the first question was, what is he liable for? Under basic corporate law, he doesn't have liability on the lease and he doesn't have liability on the vendors. But if he filed a bankruptcy, you'd still list those as creditors because they're dischargeable, right?
Absolutely, unless he personally guaranteed the lease. Small business guy usually does.
What about the taxes?
Well, we're going to skip the taxes because payroll taxes, both state and federal, are non-dischargeable in bankruptcy.
Oh, wait, what do you mean we're skipping them?
We'll come back to them.
Jim's
but that's
not going to be happy if you skip the taxes.
Jeff is going to have to discuss that.
Well, I want to know, are they dischargeable, Brian?
No, they're not.
Why?
Because
They're payroll taxes.
Payroll taxes are never dischargeable.
Well,
we have $235,000 of payroll taxes.
Right. So Jim's still stuck for that. But let's keep going. His personal income taxes.
Are those dischargeable?
Yes and no. His 2016 are dischargeable because they came due more than 3 years ago, as long as they've been filed for at least 2 years and they have been assessed in the last 8 months. You'll notice the 2017 isn't dischargeable because it didn't come due at least 3 years ago. April 17th of this year is 3 years for the 2017 tax return. After April 17th of 2021, those become dischargeable.
So you already looked at the calendar and saw that the 15th falls on a Saturday or something?
Yes.
Oh, very good. Okay.
His personal credit card debt is dischargeable, and his underlying personal obligation on the first and second mortgage is dischargeable.
So
he can get rid of everything
except the payroll taxes.
Correct.
Okay. All right. So we're going to take a break, and then we're going to figure out where we go from there.
COVID-19 presents a fight for our personal and business financial survival. You have to make choices. Cash is critical. Do you tap your retirement, home equity line, or run up the credit cards? You need the right plan to avoid being wiped out, and you need it now. You can't rely on the government or banks. Call us. We're the experts in financial crisis. We were here for you and your business in the Great Recession, and we're here for you now. We will create a plan and get through this together. THAV GROSS will solve your problem.
Tax problems are major problems. Don't let the IRS levy your wages and seize your assets. There is a solution.
We're THAV GROSS. Our firm will solve your problem.
If you're behind on your taxes and owe money to the IRS, call THAV GROSS.
We've been solving tax problems for 32 years. We stop wage levies, resolve unfiled returns, and obtain the best possible settlements.
Call THAV GROSS today, 888-235-HELP. Is the debt piling up? Struggling to get by?
It's all about preserving future income. Bankruptcy is one option. When it's right, it's the least costly, most effective way to save your home, eliminate a second mortgage, and wipe out credit card debt. But you need to address the problem now.
We help people with bankruptcy. Call the experts.
We're THAV GROSS. Our firm will solve your problem.
888-235-HELP. That's 888-235-HELP.
I love you too. Bye-bye. That was Jerry. Emma just said her first word.
Oh.
Jerry says hello and they'll be over soon.
Who's Jerry? Is he a friend of yours?
No. This Jerry. Our Jerry. And this is his wife and their little girl.
You can't work. You have to deal with pain and stress. Worse yet, our system for applying for disability benefits seeks to deny you the benefits you're entitled. Jeff Kirschner is an expert in obtaining disability and workers' compensation benefits for his clients. You need to call Jeff before you apply or after you're denied to get the benefits you deserve. 888-235-HELP. 888-235-HELP. Carrying too much debt? Resolve your debt. Call THAV GROSS.
You don't need to be broke, and you don't need to hit rock bottom. If you have income and you're struggling with debt, dump it. Think about the next 10 or 20 years. If you do what the banks tell you, you'll have nothing to retire with. There is a solution.
Don't waste your future. Call THAV GROSS. We're experts at eliminating credit card debt. 888-235-HELP. That's 888-235-HELP. If you're retired and in a financial crisis, there is a way out.
It pains me when I see a retired couple exhaust their savings by paying credit card bills and for a home hopelessly underwater.
THAV GROSS specializes in helping retired people in financial crisis.
You just can't keep paying until you're broke. You need to address the problem now.
888-235-HELP. That's 888-235-HELP.
We're THAV GROSS. Our firm will solve your problem.
All right, so we're back. All right, so the conclusion was there's $205,000 on these payroll taxes that are non-dischargeable. Brian, you said we were going to skip it, so let's talk about it right now. Jeff, what is it about payroll taxes that makes them non-dischargeable?
Well, there's a component of payroll taxes. When you employ people and pay the payroll taxes, the employer pays a share and the employer pays the second half, which they withhold from the paycheck of the employee. So that's the federal income tax, the Social Security, the FICA, the Medicare tax that they take out of the paycheck. They're supposed to hold that and pay it to the government. The government treats that as its money and the employee's money, not the employer's money. So it's held in trust. And when you don't pay that back, the government looks at that as stealing from them and your employee, and they're not going to let that go in discharge.
Hey, Jeff, I got a question.
Yeah. Hang on 1 second, Brian. Well, I'll come right back to you. So on the state level, it's the same thing. If it's state withholding tax, the state looks at it as violating a trust as well.
Exactly.
Go ahead, Brian. I'm sorry.
You know, Jeff, a question that I get a lot from people is, okay, my employer never paid over my withholding taxes to the government, but they took them out of my paycheck. Does it still count for me because I have to pay Social Security? And so he took my Social Security and didn't send it to the government. Do I still get credit for that Social Security that was withdrawn from my paycheck?
Yes.
Except there's an exception to that.
Right.
The exception to that is if your first name is Brian and your last name is Small. In that particular case, there's a provision in the Internal Revenue Code that says if your employer doesn't pay over the payroll taxes for you personally, Brian Small, you do not get credit.
No.
Wasn't that part of the Trump amendments?
Seriously, this is actually. I mean, I get this question a lot because people want to know how do they get the credit for it and how do you get the credit for it if the employer doesn't do your W-2?
No, that's a big problem.
That's a bigger problem.
Are not done with the W-3 summarizing it, and the payroll tax returns are not done, particularly the W-2. That's where the credit comes from. So that's critical. So if you're ever in a situation where you've worked and your employer doesn't provide a W-2, you need to take action to compel that to happen because it's a double whammy. Not only do you not get credit for the payroll taxes, which is on your current tax return, you're not getting credit for your Social Security.
Right. That's why employers are required to give you the W-2s by the end of January so that you have time, if you don't get it, to do something about it, act. People need to take control of their lives somewhat in this regard and make sure that what's supposed to happen is happening to help protect themselves. But assuming that they got their W-2 and it was the employer's fault, that's why the government will assess a trust fund penalty. What will happen in that case, the business is liable for the payroll taxes, but the government will assess the responsible person, usually the owner of the business. There can be others, but we'll talk about the owner just for now, will be personally liable for that trust fund portion. So the IRS will continue to pursue payment of that part of the tax from the business owner.
You know, and it's an interesting thing. Go back to something Brian said at the beginning where people continue operating their business too long. What so often happens, and I don't want anyone to think that it makes the person a bad person, is you're running a business, it's not doing well. So what you do is you continue to operate the business and you stop making the payroll tax deposits because you're using that money for cash flow to pay net payroll to your employees and to pay rent because you don't want your landlord to evict you. And your hope is that the business will turn around and you get caught up, and you don't. And then finally you cut the cord on the business, and now you have this big payroll tax liability that's non-dischargeable. It's very easy to slip into that problem. The better outcome is if you realize your business is going down and it's not going to be able to make it, you're better off recognizing that early and taking steps to get out from under the business sooner. But practicality says oftentimes people don't do it. Even if you don't do it and you have the liability, as you're going to see when we go through this, there are remedies to address that payroll tax liability, even if bankruptcy. Brian can't help you with a bankruptcy on him, but Jeff can help you with regard to the Internal Revenue Code on payroll taxes.
Now, one important thing to note with regard to filing the bankruptcy, it does give you breathing time when you're dealing with the federal government. It stops the federal government during the period of time that you're in bankruptcy from collecting on that trust fund tax. So it gives you time to work with both myself and with Jeff to get the tools of financial crisis management, which is what combined, because this is not a one-step process. It's a multi-step process to fix the problem.
All right, let's go back to Jim now and start with the steps. All right, so let's assume I gave you all these facts on Jim, and I'm also telling you Jim's got a new job. He's making $125,000 a year, and he wants to get rid of this debt. Can he file bankruptcy? What's he going to do, Brian? He's making all this money, $125,000. Can he file a bankruptcy, or is this means test you're talking about going to stop him?
So because the majority of Jim's debt is non-consumer debt, i.e. related to his business one way or the other, he doesn't have to pass the test, the means test, to file the bankruptcy. And he can make $125,000 a year. He can make $425,000 a year, and he can still file the bankruptcy.
Let me ask the reverse. If his non-consumer debt was less than his consumer debt, making $125,000, would he be able to file a Chapter 7 bankruptcy?
He might. It depends on the size of his family and whether he passes the means test.
If he's single with no children?
No, not a chance. He won't pass the means test.
So it's important to realize in a situation like that, your income does matter and the mix of your debt also comes into play. In this case, Jim can file the bankruptcy. Even though he's making $125,000, he can discharge all the debts except the payroll taxes. We're going to take a break, and we're going to come back. We're going to turn it over to Jeff to figure out how do we get rid of those payroll taxes.
Carrying too much debt? Resolve your debt. Call THAV GROSS.
You don't need to be broke, and you don't need to hit rock bottom. If you have income and you're struggling with debt, dump it. Think about the next 10 or 20 years. If you do what the banks tell you, you'll have nothing to retire with. There is a solution.
Don't waste your future. Call THAV GROSS. We're experts at eliminating credit card debt. 888-235-HELP. That's 888-235-HELP.
A lifetime of hard work. If you don't have the right plan in place, you can lose your home, your savings, and more. And you didn't come this far to lose everything. Samasco Law wants you to know that laws are changing. Today, the average cost of nursing home care is $85,000 a year. With proper planning, we can help protect your life savings and get you the Medicaid and nursing home benefits you deserve.
How much can you afford to lose? Call Samasco Law today.
Is the debt piling up? Struggling to get by?
It's all about preserving future income. Bankruptcy is one option. When it's right, it's the least costly, most effective way to save your home, eliminate a second mortgage, and wipe out credit card debt. But you need to address the problem now.
We help people with bankruptcy. Call the experts.
We're THAV GROSS. Our firm will solve your problem.
888-235-HELP. That's 888-235-HELP.
Time for announcements. I want to remind our viewers to listen to us for Law and Reality Live on the Praise Network, Tuesdays, 10 o'clock a.m. and Saturdays, 7 o'clock a.m. And then on KISS 105.9, Sundays, 7:30 a.m. every week. Law and Reality is happy to announce a free webinar. Stay in your home, attend our webinar via the internet. You can watch it at the time of your choice and at your convenience. Just go to thavgross.com or lawandreality.com on the homepage, click webinar, and you'll be taken right to the webinar, and you'll have Brian, myself, and Jeff Linden presenting to you. We're going to talk about how to eliminate your debt and get a fresh start and live debt-free for 2021. Remember, to be free, you must be debt-free. We'll address all the methods that we use to preserve future income, get rid of the debt so that you can start saving money in the bank rather than giving your money to the bank. There'll be a special segment on small businesses facing debt and closure issues, learning your best options of when to use bankruptcy and when not to file bankruptcy. Attendees get a free copy of my book, Dump Your Debt. You can always come in to THAV GROSS for a free consult. We're doing teleconferences, phone conferences, as well as proper social distancing for in-office meetings. Whichever you prefer, we can accommodate. You want to call 888-235-HELP or go online to sign up. Debt issues, tax issues, estate planning issues, business issues, elder law issues with Pat, disability issues with Jeffrey Kirshner, criminal law issues with Scott Weinberg. Just reach out to us. We're happy to help you. When you come in and you get a free consult, it's not a meet and greet. It's an analysis of your problem with a specific developed plan as to the best and optimal solution to that problem, so you know what your options are and you know how to implement a plan to resolve the problem. Also, take a look at the free reports that are online. Resolving Tax Problems, The Real Solution by myself and Jeff Linden, How to Save Your Home from Foreclosure, Business Formations, Loans and Grants for Small Businesses in Detroit and Michigan, and also the Retiree's Guide for Social Security from Pat Samasco. I want to thank our sponsors, THAV GROSS, Samasco Law, Kirshner Law. Now back to the show.
Tax problems are major problems. Don't let the IRS levy your wages and seize your assets. There is a solution.
We're THAV GROSS. Our firm will solve your problem.
If you're behind on your taxes and owe money to the IRS, call THAV GROSS.
We've been solving tax problems for 32 years. We stop wage levies, resolve unfiled returns, and obtain the best possible settlements.
Call THAV GROSS today, 888-235-HELP.
COVID-19 presents a fight for our personal and business financial survival. You have to make choices. Cash is critical. Do you tap your retirement, home equity line, or run up the credit cards? You need the right plan to avoid being wiped out, and you need it now. You can't rely on the government or banks. Call us. We're the experts in financial crisis. We were here for you and your business in the Great Recession, and we're here for you now. We will create a plan and get through this together. THAV GROSS will solve your problem.
All right, we're back. All right, so Jeff, we've got the payroll tax liability. On our facts right now, Jim's making $125,000. How does he? What's the method that he uses to try and get rid of the payroll taxes completely?
Okay, so his best method is an offer in compromise. So an offer in compromise is where the IRS will take less than what you owe and wipe out the debt for the deal that you're a good boy from a tax perspective for 5 years. And the way you do that is it's a formula where you take a calculation of your equity and your assets plus your net monthly income less the IRS formula for allowable expenses, and you get a number. If the number is zero, you offer $100 to wipe out everything. If that number is positive, then you calculate a 12-month payment, and that would become your offer.
All right, so let me see if I understand this. It's not about how much you owe. If Jim owed $185,000 in payroll taxes, or if he owed $1,850,000 in payroll taxes, is there a difference between the two?
No.
So it's just about what assets you have and what's your income versus your expenses, right?
In general, yes.
All right, so if Jim wasn't working, then he'd have zero in income versus expense, right?
Right.
Okay, and then in terms of assets that he has, he's got $5,000 in cash, but by the time he applies, let's assume he has, $500. What happens with the IRA?
The IRA is going to get valued. The IRS understands that if you were to early liquidate, there's going to be a penalty. So they're going to count the IRA at 70% of its value and say that, not that they're going to take it from you, but they're going to say you could liquidate it and afford to pay that. So we're going to count that money as the minimum you're going to have to pay us in your office.
In this case, it's $7,000.
Right.
Okay. So Jim's big issue, if I'm understanding this, is if he's making $125,000 and he's single, after his allowable expenses, how much would he roughly have to pay?
He might end up, it depends on what his actual expenses are, but his surplus income would probably be about $2,000 a month. So his offer would go up to a minimum of $24,000 plus the $7,000 in the IRA.
Okay, so in that case, it's quite a bit. But if Jim was only making $4,000 a month, then what would be the consequence?
Then he'd probably be the $7,000 in the IRA, and then he'd be done.
Brian, what were you going to say?
I was going to say, when you look at the perspective and say, okay, it's going to cost me $100,000 or $235,000, you're always better off if you can make an offer work and figure out how to get there. It's easier for Jim to bite the bullet and live humbly for a year to get himself out of debt with the IRS than it is
or borrow from family if he has to get the money.
Than it is for him to be burdened by this gigantic debt for the rest of existence.
Where did Jim start? He started with $920,000 worth of debt. If at the end of the day he was out from under all the debt for $31,000, including the payroll taxes, not so bad. If he's only making $4,000 a month, then he's probably out from all the debt for close to $7,000, right, Jeff?
Right.
Okay, so here's the point. Here's another point for Jim. If Jim's in this environment and he's shutting down the business, I applaud him for finding the new job, and he should do that right away. It's smart to come in and see you guys right away when he's making the decision to shut the business down, because if he applied for the offer and compromise before he got the $125,000 job, he'd be saving money. Now, if he was making $250,000 and the offer was too high, then what would you do with the tax liability, Jeff?
We'd get him into an installment agreement for a payment as low as possible and try and work it so that he would not pay it off in full before the statute of limitations expired, and try and save him money that way.
All right, let me summarize. Your business fails. You can get rid of all the debts that you had in that business, whether you guaranteed the lease, guaranteed the loans to the bank, and everything else. If you left yourself payroll tax liabilities, those are non-dischargeable. We use the offer and compromise method to get rid of those. It will work better if you have no income and no assets. If you do, you'd get what we're able to put together. But the faster you act, the better the outcome will be. Have a great week. We'll be back next week with Law and Reality.